Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of big companies and try to make sense of it all. This week, we're peeling back the layers of THOR Industries, Inc., the giants of recreational vehicles. Get ready for a financial journey that'll make you think twice about RV road trips. And if you appreciate digging into these corporate secrets, make sure you're subscribed and we have a Discord community linked in the description below. Alright, let us get straight into their annual report. THOR Industries generates a massive amount of revenue, and this report details their financial health and operations for the year ending the 31st of July, 2025. First off, let us talk about the top line, the net sales in fiscal year 2025. Total net sales were a staggering $9.57 billion. Now, that is a fantastic number, but what is really interesting is how it compares to the previous year. That is a decrease of about 4.6% from 2024. So, while they are selling a lot, they are selling a bit less than the year before. This dip is mainly attributed to lower demand in their North American motorized RVs and European segments, though their North American towable RVs saw a slight increase. Let us break down those recreational vehicle sales. Their North American towable RVs brought in $3.78 billion in 2025, a nice 2.9% increase from the prior year. That is good news. However, their North American motorized RV sales took a hit, dropping 11% to $2.17 billion. And across the pond, European RV sales also saw a significant decrease of 10.1%, falling to $3.02 billion. So it looks like the European market and the bigger motorized RVs in North America are facing some headwinds. Looking at their North American towable segment, while overall sales went up, the impact of change in product mix and price shows a negative 3.3%. This means that even though they sold more units, their net price per unit went down. This is largely because they sold more of their more affordable travel trailers, which is great for volume, but probably not as great for profit margins. It is like selling more budget phones instead of the premium ones. Now, for those North American motorized RVs, the picture is a bit more complex. The overall impact of change in product mix and price is negative 2.4%. This time, it was a combination of factors. Class A motorhomes saw a significant 4.5% dip in net price per unit, likely due to more sales of their less expensive gas models and higher discounts. Class C also saw a slight dip, while Class B surprisingly saw an increase. This paints a picture of a market segment where they having to offer more deals or shift their product mix to maintain sales. In Europe, the story is similar but with an added twist: currency exchange rates. Their European net sales decreased by 10.1%, but currency changes accounted for a 1.7% increase in favorable exchange rates. So, on a constant currency basis, sales actually dropped by 11.8%. The mix and price impact, however, was a positive 7.9% increase in constant currency. This suggests they either raised prices or sold more of their higher-end models in Europe, despite the overall drop in unit sales. Scroll gross profit, de-gross profit. Let's talk about profitability, the gross profit. Consolidated gross profit for 2025 decreased by 7.7% to $1.34 billion. As a percentage of net sales, gross profit was 14.0%, down from 14.5% in 2024. This erosion in gross profit margin, even with a slight increase in sales for towables and significant drops elsewhere, signals that either their costs are rising faster than they can pass them on, or they having to discount more heavily to make those sales. Scroll North American motorized day gross profit for the North American motorized segment. The gross profit saw a notable drop of 24.2%. This is a direct consequence of both lower sales and a decrease in their gross profit percentage. The report mentions an increase in the material cost percentage, likely due to those higher sales discounts and shifts in product mix, eating into their profits. Scroll European gross profit, the European segment, also experienced a significant gross profit decrease of 20.8%. Again, lower net sales and a lower gross profit percentage, mainly due to increases in material costs from discounting and higher manufacturing overheads, are the culprits here. It really highlights the pressure they are under in these markets. Scroll selling, general and administrative expenses, selling, general and administrative expenses. Now let us look at selling, general and administrative expenses, or SG&A. These expenses actually increased by 3.0% to $922 million. This meant Stiampe as a percentage of net sales went up from 8.9% to 9.6%. When sales are falling, you want your overhead to fall too, or at least stay flat, not go up. This suggests increased costs in areas like corporate expenses, and European operations are becoming a bigger burden as a slice of their shrinking sales pie. Scroll corporate to gross profit digging into those corporate expenses, they jumped by 9.9%. The report points to increases in compensation costs, including employee separation costs. So they're respending more on overhead and restructuring, even as their overall sales are down. Scroll income loss before income taxes, income loss before income taxes. All these factors combined lead us to the bottom line before taxes. Total income before income taxes for fiscal 2025 was $296 million, a 15.1% decrease from the $348 million reported in 2024. This is a direct reflection of lower sales and higher costs. European income loss before income taxes, the European segment. Income before taxes took a massive hit, falling by 56.1%. That is a huge drop driven by the significant decrease in net sales and the squeezed profit margins we discussed earlier. Scroll at a backlog, order backlog looking ahead. Let's check their order backlog. Total backlog for recreational vehicles decreased by 6.9% to about $3.05 billion. The North American backlog actually increased by a healthy 15.1%, mainly due to a rebound in their motorized RV orders after a tough 2024. However, the European backlog saw a significant drop of 21.8%. This could signal continued softness in the European market. Scroll risk factors now. Let us talk about the risks. THOR faces a ton of them, as expected for a company of this size, and in this industry they highlight inflation, supply chain issues, interest rates, and competition as major concerns. They also mention the risk of cyber attacks and the potential impact of climate-related regulations. Their reliance on a small group of suppliers, especially for chassis, is a big red flag, and the fact that one dealer, Freedom Roads LLC, accounts for about 14% of their sales is also a significant concentration risk. Now, when it comes to their financials, one thing that always grabs attention is goodwill. They have a massive amount of goodwill, nearly $841 million allocated to the Excel reporting unit alone. The auditors spent a lot of time on this, evaluating management as fair value estimates, which involves a lot of educated guesses about future sales and market conditions. While they found no impairment this year, it is a reminder of the significant assumptions underlying their valuations. Scroll total current assets. Let us quickly glance at their balance sheet. Total current assets stand at $2.77 billion, a slight increase from last year. Their cash and cash equivalents are healthy at $586 million, up from $501 million. This shows they have a good amount of liquid cash on hand. Scroll accounts payable. Accounts payable on the liabilities side. Accounts payable are up to $738 million. This could mean they're retaking longer to pay their suppliers, which is a common tactic to conserve cash when sales are down. Scroll stockholders' equity, common stock accounts payable total stockholders. Equity attributable to THOR Industries is $4.28 billion, an increase from the previous year, which is a positive sign. Scroll net income, looking at the income statement. Net income for 2025 was $256 million, a slight decrease from $265 million in 2024. While still profitable, this continues the trend of lower earnings. Scroll weighted average common shares outstanding, basic weighted average common shares outstanding. Basic, it is interesting to see that their number of weighted average common shares outstanding has actually decreased slightly over the years. This is likely due to their share repurchase programs, which can be a smart move to increase shareholder value when the stock is trading at what management believes is a discount. Scroll total contractual cash obligations. Now, for the financial obligations part. They have significant contractual obligations totaling over $1.19 billion coming due within the next 5 years, primarily driven by debt principal payments. This includes over $500 million of senior unsecured notes due in 2029. Scroll standby repurchase obligations, and then there are those standby repurchase obligations on dealer inventory financing. These are essentially guarantees. As of the 31st of July 2025, they had $3.48 billion committed under these agreements. This is a massive contingent liability that could come back to bite them if dealers default. Scroll net sales overall, THOR Industries is a massive company with a dominant position in the RV market. However, this report shows they are navigating a challenging period. Sales are down, profitability is squeezed, and they are facing economic headwinds in key markets. While their towable segment is performing relatively well and they're managing some costs effectively, the declines in motorized RVs and European sales are concerning. Their large order backlog, especially in North America, offers some comfort, but those substantial risks, particularly the dealer repurchase obligations and reliance on key suppliers, cannot be ignored. In conclusion, THOR is a resilient player, but they are facing a tough market. Their strategy of innovation and efficiency is crucial, but they need to carefully manage their costs and navigate the ongoing economic uncertainties to return to growth. Alright, that is our breakdown of THOR Industries' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.